Welcome to Stephen Johnson Stocks, the week of resignation. Basically, I shorted a multi-year 52-week high spiker on record volume, got stubborn and blew up a 4.6k account. It was originally around 4, then I'd made about 700, 800 in it, and then I blew the whole thing up plus the profits. Since come back, market shifted all of a sudden, had a record 2k trade, and then another back-to-back great day with a 1.56k. A little credit goes to a travel trader, my little Australian friend, who has been giving me tips and advice, and he's helped me definitely maximize risk reward and hold on to winners longer. We also had the kind of, not the blow up, but there's a great Steady Trade podcast on when I publicly resigned, and then me and Tim Sykes were semi-fighting with each other on Twitter. I had my perspective, he had his perspective. Watch the Steady Trade podcast because that really best illustrates how things panned out and what I feel about things, and Tim Bone, what he thought is the moderator. So exciting stuff when that comes out. But on the whole, for you guys, he has a recap of the trades. Still very much trading, very much in the challenge, still very much learning, but I'm only shorting gappers into volume resistance. I've really watched the charts. You will see a clear difference between the charts that work and the charts that don't work. And I'll leave it at that for now. Now, CLPS goes down to another one of the kind of the big losses, and it's easy to kind of understand why, because if you go back on the chart, there's no real resistance levels. This is the day that it was shorted. When we look at the day it was shorted, it traded 15 million, which is the most volume it's kind of ever traded. And whenever we have a stock with high volume and no resistance, it's clearly going to run. So on CLPS, shorting the top percent gainer at 7:40 in the morning is a surefire, safe way to lose $5,000. And when you don't cut it, I mean, obviously we have this high of daybreak here, this line, and when you don't cut it and instead you average up in here and in here, you kind of just averaging up into infinity, and nevertheless there's opportunities to get out as it dips and makes low highs here, but you think, no, I'm going to go for this big home run now that I've averaged up, only for you to should have got out here at high of day in the 980s, and you didn't. You just held to the 1040s, and then obviously your last chance is a washout, but it's blind faith, and then you get nothing near a washout. It opens in the 960s, pushes to the 10s, consolidates for a while in the 11s. My account blew up at exactly around the 12s. 12.10, 12.15, I don't think you can see a 12.15 print, but my account blew up. My small 4.6 thousand account literally blew up in the 1240s before it came down. So I blew up at the high of day, and I probably would have banked a couple of thousand instead of losing 4,000, but I'm probably more pleased that I blew up because I would have just repeated the same mistake had I have not. Isn't it ironic that I blew up at the high of day a little bit? But you've got to kind of, the key here is to look at the pre-market action and see how much are we trading pre-market. Now we can see that we're running with kind of 500, 900, 1.2, 1.3, 1.4, about 1.5 million shares pre-market. Generally, it'll trade 10 times what it trades pre-market, so we're looking at about 15 mil. Traded like 14.3 mil. If it's never traded 14 more than 10 mil, traded 1 million, yeah, if it's never traded that much ever in its life and it's at 52-week highs, I mean, let's see, is it at 52-week highs? It's at 52-week highs. It's a good sign that this stock is going to run big time. And look, imagine I didn't get blew up and I had a bigger account. And it actually went from the 9s to the 17s. So I was way early and people have made a fortune. because there's no one underwater. The volume's unprecedented, and it was just a really stupid trade. But I think I've really hopefully learned. LTPR was just another real like kind of gimme short, and it's really because the risk reward. I mean, shorting really near the top, and you don't know this is the top, but from the 150s down to the ones is just it's just a huge risk reward, which allowed me to have the biggest trade I've ever had. And we kind of knew that it should definitely come down because the volume was just not enough. And it's the same kind of short that I regularly take. It's the people are underwater here. We've got kind of 60 million shares worth of people being underwater here. We've got this huge volume resistance, another 40 million shares of people being underwater here. So it's like almost 100 million shares of people kind of trapped underwater, and it's since only really trading a few million a day. So that's nowhere near to like kind of get this full 100 million out. So when the stock gaps up, it's the same strategy I've been applying. I'm not trying to catch the top anymore. So what I'm doing here is I'm seeing this kind of downtrend, downtrend, downtrend. The top's in, the downtrend's in, and then I was just waiting for some sort of kind of reasonably good pick. And I mean, there's a couple of kind of higher days you can risk off here. So obviously you've got the top here, and then there's a new kind of double top, and then there's another kind of you've got like a kind of a triple top here, 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 and here. So I started in building in here, adding here. When it started falling apart at the open, pretty much going full size all in here, just because the pre-market action is so terrible. I mean, you can risk off the 160s if you're wrong, but I mean I figured that I'd have the conviction to think that this is just going all the way down fast, and it did. It was just a straight out washout covering, really in around the 120s. When I started getting not really the crazy thing about this is there's just no bounce, so there's no reason to get out. You've got this straight kind of channel where from the pre-market to the open you've got this straight channel, and when it's only when it kind of breaks the channel, I was covering a bit out the channel and covering the rest in the 120s, and really safe, good, easy trade. But where I get burnt in the past is I'd be so eager to catch it in the 160s, thinking, oh, it's 20% up, that I'd get my face ripped off here, and then maybe I'm covering and I'm out. But if you just look for the backside, and like I was shorting like the end of the move, but I still banked really big from the 160s to the 120s. But I mean, had I have been up a bit earlier and I saw this kind of line break, I could have been in the 170s, covering in the 110s for an even better risk reward. Cassie was a real gift. I think second or third. No, I've had two 2K trades now, so it's this 1.5 trade's like my third biggest. But it was just a real gift because it was up like 50%. And I mean, well, it is not miles off multi-year highs. When you see this kind of downtrend, you know that obviously the company's not doing brilliantly. And when you look at all this kind of volume resistance all the way kind of across here, and this is on kind of 1.5 million over like say 20 30 days. If you add all that up, that's like a 60 mil resistance level, and the stock's only traded 4 million on the day. So the only other indicator I'm looking for is kind of weak pre-market action to confirm. Now, what I've always got in trouble with is shorting and finding the top, but what I've started to do is just wait till 8 9. If you miss some of the move, it doesn't matter. At least with this one, we've got like a clear bottom and top, and you can just short these kind of pops and then risk off the high of day. And then as long as you have your position size accordingly, I was starting in around here. I added here a bit aggressively when I thought I was going to cut, and it did come back on me a little bit. But I held through, risking roughly kind of a little bit higher than this point, a little bit, not quite higher day because my position size was too big by this point, but basically risking the 815s, 820s, 830s max. And it just washed out, and I watched it come down, covered some in the 680s, Covered some in the kind of the 650s. I wanted to wait for the kind of 620s, the fives, the 580s, which it did get down to, but I just didn't have the patience. But the important thing was really letting the high of day set and then creating a good risk reward trade based off that high of day, knowing that the bigger picture was that everyone was underwater from this recent kind of sell off, and the volume on the day based on pre market action was never going to be high enough to outweigh those sellers who will be selling when it gaps up and they get out of jail kind of free card get out. And the news doesn't matter. It's basically the pre market action and the volume. And I'm going to leave it at the fact that it's been amazing to see that I can make these 1K, 2K trades, and I'm sure maybe 3 and 4K trades might not be too far away. And then you think, oh, he's lost 4 grand or 5 grand or 7 grand, but really you can make it up in a couple of trades once you know what you're doing better. And to conclude, I will say that I got wrapped up too much in data. I started thinking that I could work off averages of saying stocks up between 20 and 40% should spike 7%, or stocks up 25 to 30% on average should spike 5%. But you just can't read it like that. You've got to think, what's the long-term history of the chart? How many people are interested in the stock today? How many people are likely to sell? How many people are likely to buy? What is the overall market condition? Are a lot of longs going to chance the market right now? And am I going to get surprised and blown out? Or is there so much volume pre-market that there are so many buyers that even if there's some sort of fundamental resistance, it could